Silver ended a great week and a great month, up over $3 an ounce, new all-time record high. We're trading above 56.30. I think I just saw it trade above 56.40.
It's now breaking out, meaning that the money flow that we've seen coming out of doubters in the stock market, some large skeptical asset managers, let's assume, it's helped gold go up. But when you break that spread out, and you're doing it this month, we're at levels now that are incredibly above that breakout point. It says, hey, it's just beginning.
The UAE, United Arab Emirates, and China conducted another successful test of Enbridge, a real-time test. For those people that don't remember, Enbridge is the cross-border payment system that was designed by China, Hong Kong, Thailand, UAE, and of course the fifth full participant who came in a little bit later, Saudi Arabia. They're the big five, originally designed with the assistance of the BIS Innovation Hub.
In today's weekly recap, three financial experts, Peter Schiff, Andy Schectman, and Michael Oliver, share their latest insights about the recent silver price breakout. In today's show, we present you the best clips of the week so you don't have to watch a gazillion hours of footage to be informed. Now, smash the subscribe button, turn on notifications, and make sure to enjoy the Black Friday 50% off discount in goldsilverstacks.com link in the pinned comment.
Not too shabby either, up better than $60. I think I just saw it up $65, trading at $4,220. It's not a new record high, but it's getting close, probably on a monthly basis, because this is the last day of November. And on a monthly basis, it probably is a new high for the month. In fact, it may even be a new high for the week. I'm pretty sure that it is. In fact, looking at how the precious metals have performed, silver up 6% today, which is, startling by itself, but it's up 13% on the week, 16.5% during the month of November. What a November to remember. But I think we may get an even more memorable December, because I think we're going to get a big follow through. Year to date, silver is now up 95%. Think about that. And the year isn't even over. We still have another month. So I think we're going to end up with a double in the price of silver in 2025. Gold up about 1.3% today. On the month, up more than 6%. And on the year, still up better than 60%. But silver is now outperforming gold year to date by about 50%. Now, this is something I have long been forecasting on my podcast and on these weekly market wraps. I've been saying that silver would eventually wake up from its slumber and take the lead and outperform gold. And that is exactly what it's doing. That's why I've been so bullish on silver, and I've been recommending that all of the Schiff Gold customers buy silver too, not just gold. In fact, I've been recommending more silver than gold this year for the specific reason that silver was so cheap and you had a long way to go to catch up. Now, it's still cheap. Clearly not as cheap as it was, but I think we have tremendous upside potential. I think silver could trade $100 an ounce by next year. I don't expect gold to make that large a percentage move, although I do expect gold to be above 5,000 next year. So both metals should still be purchased, but I still think that even with this move, you still want to make sure and be buying some silver along with your gold. And the fact that silver is now leading gold higher, this is very bullish. This means that the precious metals bull market is much stronger, because in the past, gold was leading silver. In fact, it was dragging silver, almost kicking and screaming like it didn't even want to go up. And that was one of the negative divergences in the precious metal space. People would be doubting the gold market because they weren't getting the confirmation from silver. Well, now we've got that and then some. we've got silver even stronger than gold. That's what you want. This new leg of the precious metals bull, which is being led by silver, is going to be even stronger. So gold is going to make even bigger gains now following silver than it did when it was leading silver.
In today's news recap, Texas proposes gold and silver-backed currencies to compete with fiat money. In a quest for sound money, a Texas lawmaker has filed 2 bills that, if passed, would create gold and silver-backed transactional currencies backed 100% by the underlying asset that would serve as legal tender in the state. According to a report from the 10th Amendment Center, Texas State Representative Mark DeRazio filed House Bill 1049 and House Bill 1056 on November 12th, 2 bills with similar language that would add provisions to different sections of the Texas legal code. Under the proposed law, the Texas Comptroller would issue gold and silver specie coins through the Texas Bullion Depository and also establish gold and silver transactional currency defined as the representation of gold and silver specie and bullion held in the pooled depository account, wrote Mike Meharry, communications director at the 10th Amendment Center. The depository would be required to hold enough gold and silver to back 100% of the issued currency. If approved, the bills would enable holders of gold and silver specie and currency to use them as legal tender in payment of debt in the state of Texas. He noted the gold and silver backed currency would be electronically transferable to another person. Gold and silver backed currency would be redeemable in specie or at the spot price of gold in US dollars minus applicable fees. Said differently, the passage of either bill would allow anyone in the state to conduct business transactions using gold or silver. The passage of this legislation would create a sound money alternative to U.S. dollars in both physical and electronic form, Meharry said. Using gold and silver-backed transactional currency, any person or entity would be able to do business using a debit card that seamlessly converts gold and silver to fiat currency in the background. Private individuals and businesses would be able to purchase goods and services using assets held in the Texas Gold Depository in the same way they use dollars held in a bank today. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
This enables Enbridge members to convert trade surpluses, as we've talked about, directly into gold, and this bypasses the dollar entirely. This is the ultimate plan with the Shanghai Metals Exchange expansion of their vaulting system, the one that was just completed in Hong Kong. What's the significance of that? In order to take gold out of China, it has to come out of Hong Kong. So the first one was built in Hong Kong. So in an example like this, the UAE could sell oil, as an example, to China for the digitally won over Enbridge, which settles in 7 seconds, 98% reduction in fees, no U.S. or Western intermediary banks, no SWIFT. And then they can settle imbalances in gold first without converting into dollars and take possession in Hong Kong. And of course, the second vault is under construction, or will be very shortly, in Saudi Arabia. This is where it is heading, and I think that's a important piece. Couple other things that I noticed. UBS, and again, these banks are so full of BS at UBS. They're all full of it because they continue to raise their price targets. And their price targets are as useful as a mud wall because they've been wrong continuously. Yet, okay, fine, and they acquiesce and raise it. So now UBS says, well, we're going to raise our mid-year price target to 4,500, previously 4,200. Well, geez, thanks. I think that these banks that continue to raise their targets, if you go back and look what they were a year or two ago, it's almost kind of laughable. A lot of people will talk about it. I don't even think it really bears much consideration at all. They really don't want people to know what their real belief is, and that's why you have, it's funny because I have an account with Morgan Stanley, and the guy that I work with, he's a very good friend of mine, and he manages, a lot of money with Morgan Stanley. He's one of the biggest in Florida, and he lives in my neighborhood, and he wouldn't know a gold coin if it fell on his foot, yet his chief investment officer has advocated for 20% holdings in gold, sell half your bonds. And so, it's to me, these banks and the people who work underneath them really have no clue. But when you're getting Michael Hartnett, when you're getting, again, another comment from Jeffrey Gundlach, the bond king, saying that 25% gold is not overweight. And then, of course, Michael Hartnett, as we've talked about, he's the chief analyst of Bank of America. They're talking to people above, not the successful money managers who are managing $3 billion and are at the top of their game on retail. They're talking to the people who are bringing in all the metal into the United States. They're talking to the massive traders that are doing so. And they're saying gold and silver are being, in essence, by their actions, reintegrated into the system. To me, that caught my attention. So don't pay attention to what they're saying. Pay attention to what they're doing.
In today's news recap, silver hit record highs in 2025. Here's why the devil's metal has further to run. Silver, often nicknamed the devil's metal because of its volatility, has reached record highs this year and still has further to run despite a supply crunch, according to experts. The metal's growth value has been running alongside gold's, which has seen its own rally, with the price surging past $4,000 an ounce this year. Silver prices reached a historic peak of $54.47 per troy ounce in mid-October, marking a 71% rise year on year. They've since pared back gains somewhat, but are now growing again, despite low supply levels. Some people were having to transport silver by plane rather than on cargo ships to meet delivery demand. Paul Sims, head of fixed income and commodity product management at Invesco, told CNBC, while we've seen the spike up, we've seen the price come down a little bit. Longer term, there's a different dynamic this time that could keep silver at reasonably high prices and maybe continuing to go up for some time to come, he added. October was only the third time in the past 50 years where silver prices peaked. Other silver price highs include January 1980, when the Hunt brothers amassed a third of the world's supply as they attempted to corner the market, as well as 2011, following the U.S. debt ceiling crisis, when silver and gold were embraced as safe haven assets. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
Charts that we're looking at, neither one of them are simple price charts, which everybody is deluded by one way or the other. That's why there's a chorus of folks still calling every time the gold flinches, it's got to correct, et cetera, or it's the top. There is a relationship between gold and the S&P 500 or the U.S. stock market bubble, and you can plot it. It's called a spread relationship. We simply divide the front month of active contract of gold futures into the price of the S&P and express that as a percent. And we plot it, okay? Every end of every month, we plot one little dot, okay? When you plot that chart, we've shown it in prior reports, you've got a 11-year wide base on that chart, where gold back in 2011 was at a higher relative level to the S&P. And during its bear market, 2011 through, especially 2013 through 15, gold dropped, but also its relative performance dropped to the S&P. But then actually since 2014-15, you could basically take that same spread chart, draw a line sideways, And gold's been above and below and above and below. It's really been par to the S&P. Depends on when you bought gold relative to the S&P, you're doing better. Now, especially since 2024, that spread has moved up sharply. Now, when you look at the spread chart, there is a massive, very clear line across every single rally high that relative performance surges have created. So you could take a crayon and have a 5-year-old draw the line for you. Unfortunately, most people don't plot the spread chart. And if you did, you would see that this month's close, we have a half a day trading left, I think on Friday, is out above that base. Meaning that while gold has handily beat the S&P, especially since 2024, coming up from the lower end of that base, it's now punched out above it. So if you're just looking at that chart, and I erased the words gold versus S&P and didn't tell you what it was, and you thought, well, that's a price chart of some stock, you'd say, I got to buy that thing, okay? Because you break it out of a base that an idiot could see. But everybody thinks that gold has gone too far, it's got to correct, or it's excessive. And that's because they're focused on what? A simplistic price chart. And when you run a relative performance chart, it's saying not only has money been moving into gold since 2024 soundly, solidly, it's now breaking out. Meaning that the money flow that we've seen coming out of doubters in the stock market, some large skeptical asset managers, let's assume, who've said, hey, I need a little bit more in that monetary metal sector. Okay, and they've been, a little bit here and there. It's helped gold go up. But when you break that spread out, and you're doing it this month, we're at levels now that are credibly above that breakout point. It says, hey, it's just beginning. This relative performance asset shift out of the stock market into monetary metals is only now beginning. So those folks who've been tell you that, oh, this has gone too far, too long, et cetera, they need to look at that chart because it says something totally different.
What do you think of today's show? Do you believe that the current gold and silver sell-off is some sort of coordinated attack against the metals, or on the contrary, is just big players taking profits after an abnormal rally? Post in the comments section your plan for gold and silver, and share with the stackers if you are taking any profits after the mega rally we experienced this year so far. Now, peep this video right here because it's a perfect fit for you, and I'll see you on the other side.